Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Andy Swan. He's the co-founder of LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking Walmart. We're going to get a great look at the consumer. Last earnings, the stock was pretty elevated, hitting all-time highs going into that report. They gave a little bit softer guidance than maybe what the street wanted. Going into this report, we're only about 8% off of those all-time highs. What are you seeing as far as data goes? Because I think this is going to be key for maybe the markets over the next couple of days, is how healthy is the consumer doing? They've got jobs. Are they still spending?
Yeah, I think the big takeaway for us when we look at Walmart is the consumer is fine despite all of the experts and economists' predictions. And so everybody's kind of waiting for the shoe to drop, and it just hasn't come yet. And we don't see any indication that it is coming. You know, when we look at Walmart's aggressive digital strategy, that is absolutely paying off in spades. Online sales up 20% in a year, and delivery costs per order down 20%, which really highlights the efficiencies and masterful execution that Walmart pulled off there. And if we look at Walmart's web traffic, just consistently trending higher up and to the right. There's a lot of seasonality to this, but you can see the overall trend up and to the right along with the stock price. It's just showing us that Walmart's investment in e-commerce has really paid off. It's come through in terms of investor confidence, and it's resonating with consumers. If we compare, Walmart's digital traffic versus peers, right up there with Target, significantly outperforming Costco, Amazon, and Sam's, and even its own Sam's Club in terms of growth levels, which we think is just another feather in the cap of Walmart's extraordinary digital execution. And so as we go into this earnings call, we expect that the data will all be extraordinarily positive for Walmart. We think they'll have great things to say about their primary strategy, which is digital, both on the cost side and the revenue side, the user base side, the repeat customer side of things. Everything should be very good in terms of data. Now, the big wild card, of course, is what will they say they expect to happen with tariffs, with the global macroeconomy, China, etc. I think Walmart is conservative. We've seen it in the past that they'll probably, want to temper expectations a little bit. But I think that these results are going to be pretty hard for the market to ignore in terms of it looks like the consumer is fine.
Yeah, Andy, they were good last quarter, right? Yeah. The numbers they put up, revenue and earnings per share, were good. It was the conservative or hesitant guidance that really made the stock sell off, and the market, frankly. This was one of the names that started the overall market to sell off because it flashed a big warning sign. Walmart has always amazed me with the size of their company, with 8 billion outstanding shares, how they move and change their company so lean and so agile, and how they move and how they cut costs like you just mentioned. It's amazing to me how lean they are for such a massive company. Now, that being said, there's another question, and that is their PE ratio. If you look at historic numbers on their PE ratio, it's basically double where it has been over many, many periods. It's got into the 49, it's got the 51 once in 2018, went down to 20. It got to 49 in 2021, went down into the mid-20s. It's now, as we look tomorrow, a 40 PE. The question is, are we re-rating this name? Is it changing because of the technology and the advancement of this company? Or should investors be worried about that big number that they're looking at in terms of the PE ratio?
Yeah, I think that there's reason to be concerned for sure because it is expensive historically for Walmart. But Walmart is also a company that is different than it was 5 years ago, 10 years ago. It's a company that's becoming more like Amazon. Again, 20% online, 20% sales growth in the online channel combined with 20% cost per order dropping is worthy of a highly expanded multiple. It shows that the company can grow really quickly and that a lot of that growth can fall to the bottom line. And so, Walmart's becoming a little bit more like Amazon. It's something I think, 5 years, 10 years ago, we were all sitting here saying, is Walmart ever going to figure out digital? Are they really taking this seriously? And what happened was Walmart did it pretty slowly, but they did it extremely right. And they're nailing it now, and they're reaping the benefits. And those benefits could be just starting. And so I think that justifies a little bit higher PE level. And I also think that Walmart has become a little bit of a flight to safety as a lot of investors get out of the super high growth names and just look for something with some stability and some growth built into it. So they're willing to pay a little bit more for that. I don't see that attitude changing anytime soon as well. So I think Walmart can easily grow into this valuation and expand from here.
Yeah, last quarter they cut Q1 adjusted EPS range to 57 to 58 cents. The consensus was 65. Then they lowered fiscal year 26 full year guidance just by about a dime or so. So there's the headlines, and that's why the stock dropped. But the bar was high last quarter, Andy. But that chart that you have, where you had Target above Walmart, I'm sitting there scratching my head looking at a chart of Target, and that's down 40% over the last 12 months. Walmart's up 51% over the last 12 months. Are competitors starting to come in this space and maybe also affecting Walmart a little bit, or is that just an outside of the box type of look where Target, the bar was so low that any growth that you're seeing, that's why it's above Walmart in this chart?
The only reason we included Target on that chart is because you pretty much have to include Target on a chart of Walmart competitors, but it is an anomaly because the bar for Target was so low. If Target hadn't already had so much trouble over the past couple of years, where it is on a 2-year, 3-year chart would be very similar to where Amazon and the others are compared to Walmart. So Walmart is still outperforming Target. Target just got to the bottom of the barrel a little bit quicker than the others. But, going into this report, we expect great data from Walmart. We expect some hesitancy. It could be a repeat of last quarter, but we're still, conservatively bullish. And if we get a pullback, we're ready to back up the truck long term.
Yeah, and I think a lot of analysts said that last time, but the stock did drop from 105, did trade just below $80 a share at the beginning of April. So, yeah, some opportunities there. All right, great stuff, great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder of LikeFolio, breaking it down for us. Kevin, I was looking at the